China is making a strategic move away from the US dollar. It is reducing its holdings of US Treasury securities. This trend is driven by escalating trade and geopolitical tensions. The trade war between the two economic giants has intensified. China imposed tariffs of up to 125% on US goods in April 2025. In retaliation, China sold approximately $22.7 billion in US dollars and Treasury bonds. The move signifies China's intent to minimize its exposure to US assets. The ongoing trade dispute has created uncertainty and volatility in the global market. China's decision to reduce its dollar holdings is a calculated step to protect its interests. It seeks to reduce its dependence on the US dollar. The decision by China has significant implications for the US economy. As China reduces its holdings of US debt, it could lead to higher interest rates. This could potentially dampen economic growth in the United States. The move also reflects China's growing assertiveness on the global stage. China is increasingly challenging the dominance of the US dollar. It is actively seeking to establish its own currency, the yuan, as a major player in international trade. The ongoing trade tensions have accelerated this process. It remains to be seen how the relationship between the two countries will evolve. China is actively pursuing a de-dollarization strategy. It aims to reduce its reliance on the US dollar in global trade. A key part of this plan involves promoting the use of its own currency, the yuan. China is encouraging its trading partners to settle transactions in yuan. This move is gradually increasing the yuan's international presence. Another facet of China's strategy involves accumulating gold reserves. China has been steadily increasing its gold holdings in recent years. Gold is seen as a safe haven asset. It provides a hedge against economic uncertainty and currency fluctuations. By accumulating gold, China aims to diversify its foreign exchange reserves and reduce its exposure to the US dollar. This approach is in line with China's long-term goal of reducing its dependence on the United States. It seeks to establish a more multipolar global financial system. This strategic shift by China has the potential to reshape the global financial landscape. The US dollar has long been the dominant reserve currency. However, China's actions, along with those of other countries, are challenging this dominance. The rise of the yuan and the increasing importance of gold could lead to a more diversified and multipolar currency system in the future. China's decision to reduce its US dollar holdings has sent ripples through global financial markets. The immediate impact has been felt in the US Treasury market. As China sells off its Treasury securities, it increases the supply of these bonds in the market. This can lead to a decrease in bond prices and an increase in yields, which represent interest rates. Higher interest rates in the United States can have a cascading effect on the global economy. It can make borrowing more expensive for businesses and consumers, potentially slowing down economic growth. Moreover, increased volatility in the US Treasury market can spill over into other financial markets, leading to uncertainty and risk aversion among investors. The reduced demand for US Treasury securities from China also raises concerns about the status of the US dollar as the world's reserve currency. As China and other countries diversify their reserves away from the dollar, it could lead to a weakening of the dollar's value. This could have significant implications for international trade and finance, potentially leading to a shift in global currency dynamics. The long-term impact of China's actions on global financial markets remains to be seen. However, it is clear that China's move away from the US dollar is a significant development that reflects the evolving geopolitical landscape and the growing rivalry between the world's two largest economies. China's strategic shift away from the US dollar signals a potential turning point in the global financial order. The dominance of the US dollar as the world's primary reserve currency has been a defining feature of the post-World War II era. However, the emergence of China as a major economic power and its deliberate efforts to promote the yuan's internationalization are challenging this long-standing status quo. China's de-dollarization strategy, coupled with the actions of other countries seeking to reduce their reliance on the US dollar, raises the prospect of a multipolar currency system. In such a system, no single currency would hold absolute dominance. Instead, multiple currencies, including the yuan, the euro, and potentially other regional currencies, would play significant roles in international trade and finance. The transition to a multipolar currency system is unlikely to be smooth or immediate. The US dollar's deep-rooted dominance, backed by the size and liquidity of US financial markets, will not disappear overnight. However, the trend towards diversification and the emergence of alternative reserve currencies is a clear indication that the global financial landscape is undergoing a profound transformation. This shift has the potential to create both opportunities and challenges for the global economy. On the one hand, a multipolar currency system could provide greater stability and reduce the risks associated with over-reliance on a single currency. On the other hand, it could also lead to increased volatility and uncertainty during the transition period as global financial markets adjust to a new reality.